Alright, now let us have a look at price confirmation. We looked at the concept of price confirmation when we studied the hammer, where you have three different scenarios. One is the standalone hammer, then the hammer that confirms the prior support, and then the hammer that gives us price confirmation. Similarly, the same concept you can apply to all the candlestick patterns, at least the top four bullish and the top four bearish patterns, which we saw in one of our previous videos. So I look for a standalone shooting star, then I look for a shooting star that confirms prior resistance, then I look for a shooting star which gives price confirmation. In fact, if the shooting star does not provide prior resistance confirmation, it is always advisable to wait for a price confirmation. What does price confirmation mean? So this is a shooting star. In this case, it is respecting the resistance created by this candle. Now I doubt whether it is a shooting star because the upper shadow must be at least twice the height of the real body. We have to measure it, but this you don't have to measure it. Actually, it's a clear shooting star after a long prolonged uptrend. Okay, so whatever, this shooting star is confirming the prior resistance area created by that candle. This is a daily chart of Reliance Industries. So let's say there was no prior resistance confirmation. In that case, I would have waited for the next candle. I would have waited to see what happens on the next candle. If the next candle closes below the close of the shooting star, then that is called as price confirmation. What is the price confirming? The price is confirming our bearish view when we saw that shooting star. Okay, so it's advisable to wait for one more candle if you don't have prior resistance confirmation. Now in this case, we don't need that candle because it's already confirming that resistance created by this candle. Another thing to notice is that this 1000 level is look at the precision of candlesticks. The 1000 level is a very strong psychological round number. It's a whole number. So I wouldn't give much importance to 999 or 998 or 1001 or 1002. I would give a lot of importance to 1000 level because it is a round number. It's a whole number. That is where the bears come into the market and stamp their authority. They say that enough is enough. Whatever happened in the market in this rally, it has to stop. We are not allowing the price to go beyond 1000. Okay, so there are multiple signals here. One is the shooting star, second is the round number, third is the confirmation of the resistance created by this candle. So we don't need the price confirmation, but assuming these factors were not there, then we wait for a confirmation, and instead of taking an entry here, we take an entry here. Now the problem is you are selling short, you are taking a short position at a lower price, which is a disadvantage for us. So if we had taken a position here, our risk would be that much, because you now have a resistance zone, right? Between 1000 and that line there is a resistance zone. So we keep our stop loss above the zone, just one or two ticks above the zone. That closing would be our entry. So this is E, this is SL, stop loss, and probably this is S1, this is S2, and this is S3. That's where the bulls are sitting. So S1 is a bad trade. If we take this trade, it's a very small reward to risk ratio. Probably S2 is a good target to aim for. Maybe that's giving a reward to risk ratio of 2:1. Okay, S3 is even better. Okay, so if we wait for a price confirmation, we are buying at an even worse price. So our risk is from this point up until this point. That's a very long risk. Even if we then aim for S3, that's a bad reward to risk trade. Okay, so now in this case it has worked out fine. If we would have taken a short position here, we would have made money, but in real life I would take a trade here itself rather than taking a trade here, because although this increases the probability that the trade will work in our favor, but that increase in probability is coming at a cost. And what is the cost? The cost is the the lower reward to risk ratio. Okay, so that's price confirmation. So the more confirmations we wait for, the more we have to sacrifice on the reward to risk when we are talking about price confirmation. But for prior resistance confirmation, we are not sacrificing anything on the reward to risk. In this case, the trade has worked out fine. If this I would have taken if there were no S1 like this here, because it's too close. Okay.